All right, man. Let's turn this down. All right, man. What's going on? Yes, yes, yes. S&P. We're sitting right at the invasion low. So that's where we're at in life. There's a lot of troubles, man. A lot of people in chaos right now. That's the day everybody that lives in the Ukraine got fucked. Imagine if you own real estate in the Ukraine. I don't think insurance is covering it. Just saying. Now, we have a money flow pattern on the S&P. This is our anchor. We put in a box. This one got a little hanky, came down. It held the anchor. And then put in another box. There's our breakout. And basically, it did the basic of the money flow where it ran up, tagged previous high, turned around. Now, it didn't get overbought. This is the problem. It didn't. And you're not normally going to see something like the S&P, get crazy extreme. I mean, it can. But typically, it's hard to move an index. To move an index like that, you've moved the whole fucking market. And it doesn't usually move like that. A little more orderly than stocks tend to be. So this is where we're sitting, man. Right at support. Now, I'm tempted that. So this is a new anchor point, man. Basically, it's exactly this one. It might have dipped lower. I got to go look. It may be an actual new one. Which means I assume this is the low. But I don't do anything as far as being a buyer here. I needed to do what it did here, where it stops dropping. Now, when you're doing that, you're still running against the trend there. The trend is to the downside. Price is moving lower. The moving averages are pointing straight down. Everything is pointing down, 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 down. And it will, until it doesn't. Then it'll stop. What is that level? I don't know, man. Now, our problem here is there's still room to the downside if you look at the RSI to go lower. No, Aquan Rod. These are not saved, my man. I'm trying to figure out a way to do it. Right now, Instagram doesn't allow you to save it, just to subscribers. If I save it, it'll go to the whole thing. When I do whiteboard talks, I can record it to YouTube and then send a link out. That's what I did with that. But on here, it's on YouTube. What the hell am I saying? Yeah, man. Take your lazy ass to YouTube. I'm teasing, man. But it'll be on YouTube. We're holding the lows right now. That's all we know. Now, I want to give you a little insight. If you have my free ebook, it's free, man. Unless you want a hard copy, be happy to send you one. Book writing game is a poor. I forgot I was on subscriptions. I started to yell at people. I promised myself I'd stop doing that. You see right here and right here in my free ebook. Now, what my goal in life is, one of my goals is to make everything simple. So as I'm breaking down, if you go look at this, I think it's like 3 pages where I break down REITs. And I go, here's a bunch of REITs. Now, that was at the time of writing the book. Some of those REITs don't exist anymore. They got bought out by other REITs. At the time, there was like 30 or 40 of them. Well, if you go right here, it says how to profit 10% from companies going public before they go public. And what I was talking about was business development companies. They're called BDCs. Now, a BDC is a company like PNNT. Let me show you something. Now, this thing pays a 7% dividend yield. So this is in my book. I've owned it over 7 years. I don't know exactly offhand. I don't want to lie. at least 7 years. And that dividend is floated between 7% to 10, 11%. And you're like, what do you mean? Fuck, it went to like 20% at one time, meaning the stock went so low that the price to the dividend went so high. Not good. That's not necessarily what you want to see. Like back over here when the stock collapsed, the dividend was like 30% or some shit. But then it normalized, right? Starts coming back. So now it's back to a normal dividend. But this company is a business development company. What they do is they loan money to companies, mid-level companies. Let me read you exactly what this says. This is important because what stage is this in? As if I'm an investor in this and I own this as an investor, if I own this, do I want to buy some here? So the dividend yield right now at this price at $7.33, the dividend yield is 7.57%. Pennant Park Investment Corporation is a closed-in, externally managed, non-diversified investment company. That's a mouthful. The company is a business development company. I talk about this in the book. What are business development companies? Stuff like Gain, Gain, right? What is that? Crescent Campus, whatever the hell that one is. So let's look at this is Pennant, P-N-N-T. Look at Gain for a second. Also on a sell signal, right? Now, when you look at this chart, do you happen to notice something? Just back up for a second. Just act like you're a kid with a crayon. We're just gonna draw a price, okay? I'm just gonna draw a price. Just draw it out. You're gonna see this movement. Well, of course, it kind of sloped down, right? And back above the 20. Now, not perfect, right? Not perfect. Right? Sideways, right? Up. Then what? Sideways. Now what? We're going what? Down. Now, that looks a lot like that. Right? Looks a lot like that. So what the money flow allows me to do as an investor, let's say getting out is not what I'm worried about. I'm trying to accumulate because I want to grow my dividend. So I want to own some of these things that throw me lots of money. So I want to go look and see, well, where's the SPY? Well, SPY's in a downtrend. Could go lower. Okay, well, where are these companies? Could they go lower? Yeah, man, they're not oversold at all. So if you look at Pennant, it's not oversold, right? It is going down though. But where's the RSI? 36. And this is the lowest low. So I draw my little thing. And what am I trying to draw? The money flow pattern. So I'm waiting on the pivot point. Right now, this is the lowest low. And a guy could jump in and go, yeah, I'm pretty low and the stock market's going to go down. Maybe so, man. If it goes down the next day, well, that's the low. And one of those days will be the low, right? And it'll start to go sideways. And you'll see that pattern of price movement of it start to move. But as I was looking today, I was like, man, if you have that part in the ebook here, it says, let's click on it. Boom. It's like magic, man. It's like magic. A lot of these companies, one thing they do is they invest in IPOs, and sometimes you'll get special distributions because PNNT could, you know how it said it was a blah, 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 blah. What did we read? Let's see. Pennant Park Investment Corporation is a closed-in, externally managed, non-diversified investment company. Non-diversified. Right? So basically they can invest in a lot of shit. Most of the time what they're doing is loaning money to businesses. They're loaning money to, like, you have 40 franchises. You're a small factory, you're building that, like they loan you money. You can't just walk into Wells Fargo and go, hey, I need 10 million. It doesn't work like that. So these mid-level companies, like, let's see, what does Gain consider itself? Gladstone Investment Corporation is an externally managed, closed-in, non-diversified management investment company. The company's investment objective is to invest in debt securities, established businesses that will provide stable earnings and cash flow to pay expenses, make principal and interest payments on its indebtedness, and make distributions to stockholders that grow over time, and to provide its stockholders with long-term capital appreciation in the value of its assets by investing in equities, generally in correlation with aforementioned debt securities businesses that is believed to grow over time to permit it to sell equity. It goes on and on and on. Everything I just read. In other words, they can invest in whatever the fuck they want to invest in. And sometimes they'll invest in common stock, man. They'll be a second, third round in Uber. But a lot of times they're loaning money. So here's some right here. HTGC. So this was one when I wrote the book. Let's see. HTGT. Where's that one right now? No. Wait, what is it? HTCG. Jeez. There we go. God damn. Now what about this one? RSI's on what? 29. So what are we seeing? Same type of business. They're in the same sector, right? They loan money. They put money on the street. This one's RSI's 29. It's sold off more than Plenitude, right? So the RSI's 29. If we back it up and say, okay, now remember, RSI is just our early warning. All right, let's, last time it hit, how did it do? So we can just back it up. You can just go back on your chart as far as you want to go. Remember, it doesn't mean it's the low. It just means it's the current move has gone too far is what it means. And so look, it's talking about this move on this side. So it means from, come on, man. All right, having some technical. From here to here, went too far too fast. That's all that means. And then, look, because it never broke out, then it went down and did another one. Boom, got double, like a double bottom, double top. Like RSIs get those too. You'll see people draw head and shoulders and fucking all that on RSI. You don't really need to. You're just looking for the extreme points, And then look, how did the high fare? Pretty close, right? There to there. So is it perfect? No, because look, up here it banged it, and then what? Didn't really go anywhere. Down. Now what? Ran up. As soon as what? It hits it, turns around. So all that does for us as traders or investors is kind of gives us a gauge. Is the market hot or is the market cold? That's one way to look at it. Like with just not even reading anything, you can just look at the RSI and go, whoa. And you cannot know, like if I taught a kid the RSI and he had never seen a stock chart, and then I come over to the kid and I say, okay, now you remember what I told you in the classroom? If it's red on top, that means what, right? So if he's over here and he's looking just at this, and I said, hey, when you see it red, you want to buy some, and when you see it green, you want to sell some. Right? Just as a general rule. And that's what I told, not to do it, but just as that's what your brain's thinking, okay? Or take profits, let's call it that. And so we don't know what this is. And I'm like, so if you understand the RSI, you know what the RSI is. What's the RSI? It's a relative strength index. It measures the last 14 days of price velocity. How fast is price? Like if you jump out of a plane, you start to go faster and faster and faster and faster, and you hit maximum velocity, right? Can't go any further. That's as fast as you can go due to gravity. That's what this is measuring. And when you've gone too far, too fast, it's like, whoop, it's letting you know. Does that mean that's the bottom? No. But it is a sign of the bottom. It's a sign of the bottom. And in the money flow, I'm looking for 6 things, man. That's one of them. Now, you know what stock this is. It doesn't matter. On YouTube, they can see what stock it is, cheating bastards. On Instagram, I can blow the screen up. And I could say, okay, like we don't even need to know what this is. Sometimes knowing what it is will cloud your judgment. You'll be like, oh, yeah, you don't want to do that. Right? Now, there's a time for that. But if you want to help your technicals, look at technicals, see what it tells you. And then what? As we come down, is this the bottom? Was yesterday the bottom? No. What about the day before? No. So if you bought here thinking, oh man, I'm getting it cheap, money flow said don't buy that. The money flow said don't buy this one, don't buy this one, don't buy that one, don't buy this one, and don't buy this one. Right? That's how you read it. That's the sell signal, stage 4 decline. That means prices are going down. I shouldn't be looking at being a buyer until at least I get an apex point that holds where price starts to go sideways. Right? Now, I could buy. I'm just saying this is how we try to find the bottom. You can do what you want to do. But you have no reason to believe that tomorrow won't be another one down and another one. I've seen them go 40 or 50, man. Down, 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 down. And they just keep going down, man. Enron went to fucking zero. I've seen 3 of them just down, 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 down. 14 fucking, boom, companies closed. It's happened to me 3 times. One time I owned in a facility that got money from farm. It was like a REIT, and it was in the God, I forget what it was in a biotech thing. They had been lying. They'd been committing fraud. Fucking FBI raided the office. Stock goes from 72. They close it. Next day, close it. Opens at 50. Next day, they close it, and then they go bankrupt, man. I mean, it went so fast that you couldn't even get orders in. You're like, oh, I would have sold the top. Would you? Probably not. That can happen is what I'm saying. So one of the reasons for wanting that bottom, that anchor at least 4 days is, yeah, we want to buy weakness, and yeah, I want to have courage, and yeah, I want to try to buy bottom. But at the same time, I'd like to at least let it be a temporary bottom, some kind of bottom. So that's what I'm thinking about. So as I watch my investments, my fear and worry isn't that they're going down. My worry is that can I catch a bottom and catch the stage 1? That's what I'm looking for. Whether it be PayPal, especially in a dividend stock. So if I want to put money on the street, like how much money, I mean, just as a question, what if you could have $100,000 on the street paying you 8%? Would you like that? You'd be like, yeah. Okay, that's what these things do, man. This pays 5. That's not quite 8, but you get. It was $54,000 for 1,000 shares 2 weeks ago, and whoever had $54,000 of this now has $45,000 of this. But guess what didn't change? The dividend. It's exactly the same. So if we go look at the dividend, just because the price changed, and this week I told them I'm going to be talking about dividends. There's a lot of dividend stocks on sale right now, man. Not a lot, but there's some good ones. So Verizon pays 5.53%, 64 cents a share. 64 cents a share. So you could say, hey man, I want to get $100 on this. You can go calculate how much that is, right? You have the known numbers. You know the amount. You get 64 cents for every share you own. So if you own 2 shares, you're getting what? $1.08. Right? So if you want them to give you $1,000 every time they pay, you can take that math, calculate how many shares you need. It's pretty cool, man. Don't buy it here, though. It's going down lower. It's going lower. So we got to wait and see on Verizon. But now I showed you Verizon. And I like to do pairs. I like to own Coke and Pepsi, T and Verizon. So if I got money I want to put to work in the telecom space, do we want to buy the pullback in AT&T? Which AT&T's pulled back from $20 to $19, so it's pulled back $1. And what is the dividend on AT&T? Let's see. 4.46%. Now I want a bunch of these. I had a bunch of these. Is that on sale? Nope, not on sale. Now, we could go check the value of this stock, but I mean, we're not even doing that today. We're just looking at technicals. So if we're looking at the chart, what you've seen happen is what? Sideways up and then sideways, and now what? Looks like we're starting to come down. But it hasn't come down much. And look, RSI is not extreme. So AT&T is just kind of hanging out, man. It's holding up good. We got the S&P about to fall. If S&P falls, this comes down with it. But you can see it's not wanting to. So what does that tell you? It's probably going higher. But if I'm looking to get a higher return and I want to get money into the mobile space, for me, it'd be Verizon. There's reasons though Verizon came down, right? So just out of curiosity, what do they think Verizon's worth before we get off this horse? So TipRanks has 56 on it. I'm going to say that Morningstar has 15%. That's just the way they usually roll a little more conservative than this. Not a big bargain. What do they say about AT&T? 22. Yeah, so based on analyst and based on technicals, AT&T's way stronger. Which one are you getting on sale? Looks like to me Verizon. I mean, you could make an argument either way, right? I like buying that oversold though, and it's below the 20, or it's below the 200 day. Look at this. So if it was me, I'd be buying Verizon. We already had our shot on AT&T back there. I'd be buying Verizon, but not here. It's not done going down. So checking on the SPY again. It is not looking good. It is not looking good. All right, Maha Patel. Relax, man. Settle down. Nobody wants to talk to you. Let's see. It is not looking good, man. One show Verizon. I was too early. Yeah, you were too early, bro. Too early. I mean, one share. It don't matter. That stock's going to be fine. I'm just teaching the money flow. So, I mean, there's a lot dumber things to do than buying shares of Verizon here. Like, that's a good bet. Over time, that goes higher. Probably a little soon, but that, maybe not. Maybe we get it by the time we get our fourth candle, it's $47 and you ended up taking it at 45. So, I got plenty of friends that do somewhat of a money flow strategy, and they start buying the moment the RSI hits extreme. Like they're fuck it, I'm buying. And they buy every day. I mean, I got friends that put a lot of money in the market, man. Like hundreds every day, every fucking day, day after day, week after week, year after year, they're banging the market. And a lot of them that's what they're doing. If they don't want to buy it when it's going up, they're getting aggressive now is when they want to buy it. Obviously, that only works if you're making good money. April 1st, the stocks looked like it was consolidating. Am I wrong to see this? April 1st. Over here, man. It was, yeah. And it ran. That's a stage one right there. There's your, right? So this is what I'm talking about. Here's your stage one, the previous roll. There's the lowest low. Let's say a guy bought that day. You're like, fuck, I know I'm probably early. Yeah. I wouldn't have bought that day. But I would have bought on that day. And you say, why? Well, I want a low. I'm giving up the fact that I'm going to buy the low. And I want a low. And then I want at least 4 more days where it stops and holds that anchor point. And if it gets violated, then you got a new anchor point and the count starts over. And if that gets violated, it starts over, and it keeps starting over until I get 4 across, and then it's got to close above that 5-day moving average. So what if it just gets 3 or 4, but the moving average is still way up here? I'd wait. Now you could jump, but I'm just saying the confirmation is price gets above this 5-day. Meaning that you're rolling, which is fine. If you really, really want to catch the bottom, that's how you would do it. You got to buy those puke days, man. And you'll hear me sometimes say I'm calling an audible. And what I usually mean is I think it's a puke day. Like I would be shocked if it kept going lower because of, say, it was something to do with something, and everything gaps down. That's usually when that something like that happens. If you look at February 24th when Russia invaded the Ukraine, the SPY just gapped down. It was way oversold. Immediately starts coming back. That's what you're calling an audible on, not 4 days down on Netflix and going, oh man, this is the bottom. So let's check in on Netflix. Remember Netflix got puked out? Uh-oh. Wait, Gerald might be onto something. Holy sheep shit, Gerald. Let's see. Big gap down. Bottom. Nope. Bottom. Nope. Nope. Anchor. Up. Now we got a low. It opened lower than it's ever been and then came up. Next day held it. 1, 2, 3. We got 3. Now, I want it to close above that red line. You notice it's walking it. It's not closing above it. Right? So would I buy Netflix here? Nope. Not yet. Is it overbought? Yep. Is it starting to go sideways? Yeah. Has the MACD turned? Yep. Has it broke out on the thing? Nope, not yet. So we got 2 things. Stochastics hasn't broke out, and it still hasn't gotten above the 5-day EMA. What that means is the price is finally above the price of the average of the last 5 days. That's it. It's all you're looking for, man. And I need an anchor point in that, and it's not there yet. It's right there, man. And then what? I'd nibble. Now, here's your problem. See how far away these are? That takes a lot of time. Go look at moves. When big moves happen, these come together. This is a long ways from that, man. This is weeks and months, maybe months. You say, what do you mean? Look up here. Remember when it did it here? Look, tries to run, comes back down, right? When do they finally come together? Just coming together part, that's all. To even have a move. Let's see, 1 day, 2 day, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20. That's 3 weeks. No, it's a fucking month. What am I saying? That's a month in the market. Took 1 month for that shit to come together. So that's what's going to do on Netflix down here. Big drop. It's going to be a month, man. A month. Oh, it's going to be a month. People on Netflix are going to be hating it. They're going to be like, damn. They got no movies to watch. Stock sucks. Everybody's sharing passwords. Moving averages won't even come together. No, I like Netflix here, man. It's not a bad idea. I like WBD too. All kidding aside, I own Comcast, and I've done quite well in Comcast. Now let's look at WBD. It's trading below the 200. This was a spinoff from AT&T. So if you're in the money game with AT&T, I got about 50 G's in AT&T and Verizon. So this is real life for me. I need them to pay me because I got money in that little deal they got called Telecom. And they pay me money. And so I collect, I don't know, $3,500, $4,000 a year. You say, well, that ain't a lot, but it's on top of a bunch of others. So, but it is significant enough that I want to keep my eye on that. Give me my $4,000. Now I might want to put the $4,000 back into the telecom game, especially if the prices are low. But look over here, WBD. This is Warner Brothers Discovery Incorporated. HBO, a lot of content, man. Netflix is going to need these guys. Is it above the 5-day? Almost. Almost. But if you're a purist, do we have an extreme RSI? You say, yeah. Man, I could teach your kids how to use RSI. Hard part is teaching you. Now it comes down. Do we have a bottom? Yes, sir. Right there. That is our anchor point. Now think about an anchor. You're dropping the anchor on the boat, man. Need the boat to stop. Drop the anchor. How many days we got? 1. We can count the anchor day. Now, if you're conservative, right, you might not. Don't count the anchor day, but I count the anchor day. 1, 2, 3. Oh, man. Now, you might borrow this one. You'd be cheating. So, we're still short, man. Now, if you cheated and went early, this is what it looks like. MACD's turn. That MACD's got to turn. If it ain't turned, you're not even, man, just send the book back. We're not even doing the same thing. If that hasn't turned yet, you're out of control. I don't even know you, man. You're doing something different. Probably not even American. This has to go that way, okay? That's the momentum indicator. And if you notice, look right here. If you notice on that, you get what I'm saying? Like pretend like you're back in 3rd grade when you still had a shot academically with everybody else. Remember those days? You could draw on color just as good as everyone. No, there were no smart kids. We were all just drawing. Remember those? This day. And then, boom. Drew yours a little up. It's called a histogram. You need that histogram to do the tick from here to here against the RSI extreme. Meaning the RSI is extreme. The histogram ticks the other way at a minimum. Even if you're jumping the gun, you need that. All right, man, I got to remind myself I'm on subscription so I don't yell at people. Boom. Now look, it worked both times. Look, it works. Look, see the apex, the turn. If you go up here and look. Now, does that in and of itself mean no? But that's the flow of price. It runs up, it goes sideways, it comes down, it goes sideways, it runs up, it goes sideways, it comes down, it goes sideways, and it goes through this little flow. Like a little religion. Sideways up, sideways down, sideways up, sideways down, sideways up. And what we never know is how far up. We don't know. So what I assume is it's going to hit the previous one. And that's what the SPY did, man. Keep your eye on WBD. I'm giving you free game on that one. Now, I'll tell you who hooked me up with this one. You know who hooked me up with this one, don't you? The board of AT&T. They approved the merger, man, to sell. So they gave us these shares. I got like 130 or 140 in the deal. I want to get that to 200. I'll take the free ones and I'll double them down here if I can, or at least get some more. What is it worth? Man, I got this free. Free game, man. All you had to do was be in there. Come on, man. $29. WBD. Now, this ain't no bullshit either. This ain't no penny stock, man. This is HBO. All you guys watching Game of Thrones. Netflix gonna need some content. Shit, I need content. TV sucks. I'm about sick of everything on TV. So, boom. This is a play, man. And if you're not in it, you're getting in at a low price. Fuck, if I didn't have shares, I might just buy it today. Like I would buy a little nibble. It's not an actual buy signal, but I'm greedy like that. Let's see. We got Verizon. We already talked about that one. There's a lot of good dividend stocks on sale right now, man. Gilead's back down. Now look at this. It's come right back to our breakout zone. So remember what? If you watch Sunday's thing, man, I was like, just depends on when you get in. So if you were playing this up here with me, you know, we were looking to get in. We're looking to trim it, right? Then what? Shit, we're looking to get in. Right? When it breaks out, it goes to run up. Am I looking to trim it here? No, maybe up in here. It didn't get that far. All right, maybe on the next one. Took a couple on this one too. Meaning what it's playing to is true value, but if the S&P 500 is in a downtrend, and by the way it is, then guess what? The wind pushes on all these stocks. So this one was on a run, man, and then what? The wind starts pushing. AT&T was on a run, and wind starts pushing, man. These are index fund stocks. They start getting hit. If you're in the S&P 500 and everything could be going great for you, if the market gets hit, if the overall market's getting hit, you're coming down. Maybe not as far, but you're coming down too. This is a sub, what is it now? What's the dividend yield on this now? We're going to be talking about that this week. You got to buy some dividends this week, man. Don't have less dividends by Friday. Gilead, 4.92%. We're so close to 5, I can taste it. My arms are shaking. You start talking about 5% passive income, I ain't got to do anything. Man, I start twitching. And thinking, how much money can I give them? Hands start twitching, especially if they're undervalued. Like if I get next to a house I know I could rent, start twitching. Like, buy it, dude. Buy it. It's always what my brain is thinking. So this stage 4 is coming down. I'm not thinking at all about selling Gilead. I'm thinking about buying more Gilead. I'm almost at 200 shares. Shit. 5% dividend yield, undervalued by 20%. I hope they take it lower. I don't think they will. But start twitching, man. You should have a natural twitch when you start seeing passive income. You just start shaking. Like, fuck, I need to buy some of this. Let's see. The problem with dividends, we'll get into that later. What was the $15 one that he said he'd buy if he didn't have any? WBD, sir. WBD. There we go, man. I knew somebody knew. Don't yell at people on Instagram, Gerald. I wrote a note for myself. It's right here in front of my computer. Let's see. These are the nice ones. Don't yell at them. TLT. This has been a disaster. I'm long bonds. It's been a disaster. I don't have any other than I'm wrong. And I must just stay fucking wrong. I'm not giving up on this. Call me dumb. Call me dumb. I bought this one, and I bought this one, and I bought the one before it. So bonds are trading below the 200-day. These are horribly out of fashion, and those people have been perfectly right. And I continue to buy bonds. Now, do I buy here? Nope. Why? It's a new stage 4 decline, right? Yep, broke the box and everything, man. So, no touchy. RSI is extreme again. Sal, look at the MACD. MACD is saying the momentum is to the downside. No touchy. No touchy. Everything is down, dude. It sucks. So, what do? Nothing. We're just gonna wait. I'm not giving up on it, man. I mean, my size isn't that goddamn big yet, so we'll worry about it in a couple weeks or a week. Uber. Let's check in on Uber. I own way too much Uber, and down it goes. 5.5%. Now, this is a growth story that I'm staying with. A lot of them I haven't added to. I'm just not adding. There's just no sense of urgency to add here. Like, we have plenty of time. Uber's one that I would like a large position in, so I have been adding. But I wouldn't add here. The new downside target is previous low. I mean, you could have earlier this morning, and it would have been cool, but looks like we're going down. So I would hold up, man. If you added this morning, you probably were right. It was kind of back in the box. How quickly time changes, and now the momentum is to the downside. See it? We're back in fourth grade. Get the crayon. See it? You draw the histogram, right? Draw the histogram, man. The angle of the histogram tells you the momentum of orders. Yeah, orders. You're like, what do you mean? Order flow. Not changes, because order flow changes. And here's what I assume. What it's doing now, it's just going to keep doing. Until what? Until the RSI is extreme. Now, did I just confuse you? This here, combined with this here, meaning I assume, now you say, what if it doesn't? Well, then it doesn't. Usually when it doesn't, that means it's consolidating and going sideways. And hopefully you can spot that. You'll be able to draw it in. But as a general rule, since that's ticking down, I assume this is going to keep going down until what? Till the RSI is extreme. Now, sometimes you'll see it work perfect. Sometimes not perfect. Let's test it on this. Where was the first day? No. Where's the momentum? Downside. Downside. Still to the downside. Right there is the first day that the momentum ticked. Right? It don't matter what stock it is. This is NEE, though. They're a Florida utility stock. I just bought property in Florida, so I'm keeping an eye on all things Floridians. Storms, weather, fashion, food, bathing suits. This was the first day, man. And what do? Look at that RSI. It's beautiful. It's red. Look at that. Now what? On top of this, what are we doing? Anchor points. Is it, should we buy? No buying here, man. No buying, man. It's not the low. Now watch. Last time it did this, that was the low, right? Now we didn't know that, right? We need our day. So it held it 1 day, 2 day, 3 day, 4 day. There's our buy. Now this one got extended. This one, they don't usually normally play that way. Usually these are a lot closer to this anchor point. And that lets you know, okay, it's going sideways now. We don't have that yet. So you see how the prematurity of the move, not you, man. I'm not calling you premature. I'm saying of the stock market move, the movement of price, the money flow. As price moves, it's a beautiful thing, man. It's every day it prints to these charts like fucking magic. Like it just appears and you don't have to do anything. It's just right there. All you got to do is look at it. And from it, you can say, where am I on this chart here? And all it does is bring order to chaos. Order. Because it allows you to have a point where you can say, bottom, right there. Now, what a lot of guys do, especially on Instagram, that like talk shit. I get these a lot. They just say things. They don't have a strategy like that calculate, that could literally, actually could call the bottom within 4 days. Meaning, if the S&P put in a bottom, let's say in any catastrophic event, bear market, sell-off, recession, this will catch the bottom. You will buy the bottom. You might buy several of them, but you'll buy the bottom. You'll be able to see it. Now, if we add that to value and add that to common sense and add that to a strategy and a philosophy and a way of looking at the market, all this shit gets rubbed together like in a big stew. And it's all being done at the same time. So the point of this book, these things here, like in chapter 12, look, talking about MLPs. pipelines. Alarian MLP ETF holds 21 of the top infrastructure MLPs. Dividend yield is currently 11%. 29 share, 1,000 shares, $10, blah, blah, blah. I don't remember what that price is now. So these are some of the pipelines. And, these are ones at the time that I just went and researched, found a bunch of them, right? And a couple of these that I've been in for a long, long time, right? Hospitals, these REITs we talk about. That's what this does, man. You start putting all that stuff on here. So you want to own like 4 or 5 utility companies over time. But you got to start with one. So you go buy one utility company. You buy one telecom. You buy one pharma. You buy one oil stock. You buy one MLP. You buy one business development company, right? You buy one REIT. Not 30 REITs, one REIT. You buy Bitcoin, right? Not 45 coins, Bitcoin. And as you build this thing out, man, and then as you watch this price move, as you're adding money, you start to build you out, your portfolio, your baseline income. And then as you look at it, piece by piece, section by section, you begin to say, am I diversified? Do I own different types of assets, or am I all in a one? Now, nothing wrong with weighting something, meaning I'm going to go big on this because I really, really believe, like if it's out of a sense of logic and intelligence, makes total sense to weight something you believe in or something you have an edge in. But if it's something you have an edge in, you shouldn't have a lot of questions. Well, you should know it. I don't have a lot of questions when it comes to 2-bedroom, 1-bath houses. I know everything about them. Everything. I'm not asking. I don't really give a shit about other people's opinion on it or real estate or any of that. It doesn't have anything to do with my rent collection that comes in every month, right? So I believe, an edge in that just through watching it. So same in these utility stocks. One edge I have, in my opinion, is the money flow. Meaning, even if it's not picking direction, it's keeping me at all times buying into weakness, selling into strength. Literal shit Warren Buffett says. I know, crazy. Buying weakness after it's bottomed, selling into strength. That's the basic concept. If you're a seller. Hopefully you're not a seller, but if you had to be. Now, as we shorten the window, that changes, right? So if you're getting into trading, we talk about that. Trading, you're going to probably drop down the window, different game going. Same overall strategy, different points of entry, different levels of exit or stops may be in use. Especially if you're using leverage, you might want to use stops. All that stuff is doable, though. But you don't need stops in your dividend stocks. That's silliness, nonsense. You want them to come down. You need them to come down. Right? This is where you're going to make your money in dividend stocks. Because as it comes down, as you get free shares, you're going to, best thing for me right now is Verizon pay a dividend. Hello. So when they pay me my couple $100, I'm going to get 5-6 shares free, $10 cheaper than it was 2 weeks ago. Fuck, I'll take that deal today, tomorrow, the next day, right? So this is better for me. This is better for me. And better for you, especially over the next 3, 4, 5 years if this thing works its way to $60, $70, $80, right? I mean, we needed it down here, whatever the reason. Interesting thing, man. It's a beautiful thing about, we're going to talk more this week about dividends on Instagram if you're on that subscription day. I'm going to try to focus on dividends because you need to have it part of your life, not the whole thing. Like my real estate friends need capital to buy real estate. I get that. If you're not doing that game, you've got to get in on this game. So if you don't own a business, you need to invest in business, right? And then the third is real estate. And if you can't do the one, you can do the other. So, and yeah, well, that's a different conversation. All right, man, I got to go to the doc. You guys be good today. And this will be saved on YouTube if you missed it today. Appreciate everybody. Hey, if anything I can do to help you, let me know. Don't get overly worried about this, man. Don't be panicking. I know most of you are not, but the ones that are need to hear that. It's okay. Let me tell you. One of my rich friends texted me this morning. Chris Johnson. You guys know Chris Johnson? he was asking me. We were just chatting back and forth. He might be on here. What's up, Chris? And we mentioned dividends, and he was pretty, he was happy. He's like, oh man, he goes, I know, man, it's hard for people to get this. He goes, but now is the time when, when these sell-offs start is when you got to get on those if you can, if you can. And you can only, like, he was excited about it, and I could tell. And our problem was, they're not that on sale compared to other things, like compared to the Qs. Technology's been fucking blasted. It's not that on sale. I wish. God, I wish. It's tough. It's easy to say. It's hard when you watch 500 grand in dividend stocks fall to 300. But what you got to focus in that situation is that dividend drip. If you turn it back to buying more shares, you're going to compound much faster over the next few years. And if you can attack it with new money and say, fuck it, I'm going to run that bitch back to 500. When it gets back to where it was, and it will, you're going to have like 750. And once you've experienced that little, what they call the layup there a few times, and get on the right side of that, once you've done that a few times, you realize that's where a lot of the big money made. Michael Burry made his money on the short. But man, there were a lot of people that made their money buying all the distressed shit that people blew out on. The Buffetts and there were a lot of people made a lot of money off the 2008. I know a lot of people that made a lot of money off the COVID one, meaning it goes both ways, And so we got to structure our life. We got to live our life. We got to do the best we can. I was saying that today on Instagram. Invest in yourself first. Getting yourself debt free, getting margin in your life, getting room in your life, like getting as much of the bullshit out, like stuff that doesn't help you. Bad debts. To me, a bad debt is a debt that doesn't pay me money. That's a bad debt, man. We want to limit that as much as we can. That's your first investment. And then on yourself, your mind, your body, your physical health, right? Mental health. Like some people do good. You might need to go to a therapist. Might help you. Might make you a better trader if you dealt with it. Right? Or your relationship or whatever. Meaning sometimes our best investment isn't buying, Bitcoin. Sometimes our best investment is in ourselves in some way. And I don't think that means going and getting your nails done or fucking sitting at I don't think it means that, but it could be. Maybe you need that. I don't know. And when I say nails, believe me, ladies, I was including men too, because a lot of men do that. But maybe that's what you need. Usually, that's not what you need. That's a cover up, man. Usually, that's covering up for you don't like your mission. You don't like your job, or you don't like that. That's usually a cover up, man. It comes right back, man, because you got to go right back to it. He said he told us, don't tell your therapist about me, man. Yeah, man. So think on that this week, man. The dividends, and we're thinking about ourselves, man. I know shit I need to invest in myself at times, Me too, man. All right, man. You guys be good. Talking to